Hello, traders. Gary Wagner here. Approximately 3 o'clock in Honolulu, 8 o'clock in New York. It is Thursday, 11th day of March, 2021, and this is the daily report for gold and silver. I do want to apologize in getting the show out a little later than usual. However, the topics that we are going to cover, I believe, will be fresh technical studies to many of our subscribers. So we spent an extra amount of time making this as much an educational show as much as telling you where we think gold and silver are going. Hope you enjoy the show. I hope you are enlightened by some of the knowledge we present. Traders, we had a mixed bag in the precious metals markets with gold and platinum trading lower on the day, palladium and silver trading higher. We'll focus on gold and silver today, talk about our trades along with our upside strategy or target for exit if we do witness a rally. Gold flat today, down 80 cents, currently at 17.21. We have a position about $1.80 above this particular price point. When we look at the GLD, that gave up very little, roughly 0.09% at 161.52. On today's show, I really want to focus on our exit strategy, our targets, how I came to the conclusion that these are logical price points to look for, as well as define where we put our stops and why we put them at that price point. We're looking at a daily chart. On this daily chart, I have a very short-term Fibonacci retracement. We're going to use that to plot our upside target, which simply goes to the highs in August of 2088, down to the lows of 1617. I have also included our current Elliott wave count, which are the two most essential components I need to do our following forecast. By using a combination of Elliott wave plus Fibonacci extension, we are able to come up with a good model. The first thing is our assumption. Our assumption is this major move from the lows in March up to the record high was the conclusion of a fifth wave. That would mean we are in a corrective stage. Corrective stage can unfold in many kinds. I've just put up a chart that shows you the different kind. We are going to be looking at the model that is assuming that what we're going to see unfold is a simple ABC correction. In subsequent reports next week, we will typically look at the other types, and as more data comes in, we will see which is the most likely corrective pattern that will unfold. But with that in mind, we are assuming that this long multi-month correction was basically our A wave, the conclusion of our A, which means that we are now set up to have a counter B wave, which is where the short retracement comes in, right in here, and that's and so what typically will happen is in its simplistic format, we look for the B wave, the counter wave, to go anywhere between 50 and 75% of the decline. That being said, our target to exit this trade is going to be 1879 up to 1980. Now, if we get what's called a compression triangle, and we'll talk about that next week, maybe touch upon it a little this week, that would change those numbers. But as we are looking at this market currently, my most logical assumption is to have some sort of ABC correction unfold. Silver gained about 6.5 cents in trading and is currently fixed at $26.19. When we look at its counterpart, the electronically traded funds iShares Silver Trust, that closed down by 0.33% at 24.25. Traders, also next week, I want to do the same type of analysis we did today for gold, for silver. Suffice it to say, what I'm very excited about in the case of silver is I still believe it has more bullish upside potential. Effectively, we had a modest day today, but we did close above the 50% retracement, 26.12. We've also matched our targets for where resistance would come in. We touched upon the 50-day moving average. So the next thing that I would look forward to seeing is an effective close above 2680, which is the 50-day moving average. This has been Gary Wagner, wishing you, as always, good trading. We'll talk to you tomorrow for the weekly wrap-up and review. Bye-bye.